Welcome. Good morning, good afternoon, good evening, and thank you guys once again for joining the 9 Innings podcast, hosted by yours truly, Kevin Thompson, founder and CEO of 9 Innings Capital Group. Thank you guys for joining us. As I always say, subscribe to this channel. As I always say, go and get my book, MLB to CFP, live on Apple Books. If you have any questions, comments, or concerns, you can reach out to us at www.9inningscapitalgroup.com, or you can send us an email at 9innings at 9icapgroup and send us an email with your questions. If you want to subscribe to this channel, go to our YouTube station and type in 9 Innings Capital Group there. If you want to listen to the audio version, you can go to iTunes and type in 9 Innings Capital Group there and subscribe to that channel as well for the audio version. Here at 9 Innings Capital Group, we are here to do one thing and one thing only, and that is to educate, empower, and engage. And that's what we're here to do today. Talk to you guys a little bit about inflation. Talk to you guys a little bit about what is inflation and understanding what it actually is. You guys are getting all these CPI, PPI, core CPI, all these different numbers, all these different lingo, all these different acronyms. So we're going to break that down for you today. Let's get it. So we're going to talk to you a little bit about inflation. We all understand what inflation actually is. It's the price rise in regards to what we do on a daily basis. Most of us are feeling it right now, especially in the commodity space. We go and fill up our tanks and our gas and our cars, and we're seeing that prices are near all-time highs or at all-time highs. I recently filled up my tank, and it was over $5. So I was like, wow, that's different, right? But it's important to understand the differences when you hear these headlines like, oh, inflation is, for example, in April, according to the Guide to the Markets, inflation was 8.2%. That's the headline CPI number. That's the headline CPI number. So understand CPI. The headline CPI number represents everything including energy and food and energy. So, CPI, what is it? Consumer Price Index, what you're paying. It includes food and energy. Now, the reason why they give you these different numbers because they want to strip out food and energy because that is highly volatile. In any given point in time, like for example, right now with oil prices over $120 on Brent crude and WTI, that makes those numbers really, really high. You can't factor those numbers in for a longer period of time because that's more of a transitory impact, whether it's supply and demand, whether it be a war in different regions of the world. Those numbers drastically change. So they like to strip those out. So in your headline CPI number, they're going to strip it out and give you a core CPI number. So your core consumer price index of April 2022 came in roughly around 6.1% according to Guide to the Market. Now, that is stripping out food and energy. That number was still higher than expected. So inflation is still going in the wrong direction. But you guys remember what happened. They were wanting inflation to move higher. The Federal Reserve's been wanting inflation to move higher over the past several years, but not to this extent. So you have headline consumer price index or headline CPI, including food and energy. Then when you hear the word core, anytime you hear the word core, it strips out energy and food. Now, food CPI was up 9.4% in April, which again, that's a high number. So you guys have gone to the grocery store. You felt the impact. Your baskets, you're taking less home and paying more. So what you would go and get on a weekly basis, you're actually paying more for those, or now you're just buying less. Energy is up some 30% in regards to the 30.2% in regards to the April number. So that's why they want to strip that out. The 50-year average, according to the Guide to the Market, the 50-year average in energy CPI is 4.9%, and the 50-year average on food is roughly 4%. The 50-year average on core CPI and core inflation is about 3.9%. So it's important to understand what all this means. So I'm saying this to tell you that inflation is really high right now. And factoring in what the government's trying to accomplish with bringing those numbers down, they're going to raise interest rates and allow assets to flow off their balance sheet. That's going to basically slow down demand in our economy and allow prices to fall. That's the idea. That's why they raise interest rates, and that's why they choke off some of the demand in the economy to make it run less hot. So there's other numbers we want to talk about as well. We have what we call the PCE number. Now, I'm not sure if you guys are familiar with the PCE number, but the PCE number is what we call the personal consumption expenditure. This is what you basically buy on a daily basis. The measure, and I'm going to read this strictly from the website so I don't get it wrong. A measure of the prices that people living in the United States or those buying on their behalf pay for goods and services. So the headline PCE deflator number comes in April at 6.3%. That was lower than the March number of 6.6%. So it's kind of trending in the right direction. But if we take a look at the core PCE deflator, which again, when I say core, that's taking out food and energy, is at 4.9%. The 50-year average on that is 3.3% from the core PCE, and the headline number is 3.4%. So they're relatively the same. They're closely related or interrelated there. So why am I talking about inflation today, and why is it so important? Well, it's important because inflation does a couple of things to our overall psyche and to the overall economy. For example, if inflation is moving in the wrong direction, which is too high, but yet we get an increase in our wages, your wage increase would have to be as high or higher than the inflation rate for it to matter. Right now, people are seeing increases in their wages, but not necessarily seeing the benefit of that because inflation is offsetting that increase. Furthermore, what you're starting to see from our government is they're moving from the quote unquote headline CPI number and going to more what we call a chained CPI-U number. Why is that important? Before I get there, of course, you're listening to the 9 Innings podcast hosted by Kevin Thompson, founder and CEO of 9 Innings Capital Group. The reason why it's important, and don't forget to subscribe to the channel, but the reason why it's important is because when we're talking about chained CPI, it's basically saying that, well, Kevin usually goes and buys this type of meat from the grocery store. But if this type of meat has gone up to this price, he will substitute that meat for maybe this type of meat, or maybe substitute for a different type of meat altogether. So it's factoring in that there is a change in behavior from the consumer. What do we mean by that? Well, it means that the consumer will choose a lower price or a different product, or maybe not buy that product altogether and do something totally different in a basket of goods and services. Like, for example, some people are getting rid of their Netflixes, getting rid of their services because the price keeps going up. So it's factoring in that people will do things when prices rise. Why is that important? It's important for one reason and one reason only, because that's going to reduce the overall inflation rate. If I am going to remove myself from buying a certain item or a certain service because of the price and take a substitute service in that price range or a lower price range, that's going to lower the impact of the increasing rate of inflation. So be careful when you hear people talk about headline CPI, core CPI, and then when they say the word chain CPI, you know already that, oh, well, if it's chain CPI, is basically choosing from a basket of goods and services that I'm going to basically use to substitute for the higher price good or service that I used to receive. So today we talked about inflation, what it actually is. It's rising prices. It's the measure of that in regards to a basket of goods and services. Then we talked about headline CPI, what that represents, which again includes food and energy. Now remember, when you hear the word core in anything, you need to understand that that's going to be taking out food and energy. Why are we taking out food and energy again? Because those are the most volatile parts of the market that exacerbates inflation. As you can see, since April 2022, when the inflation rate came out, the headline CPI number was 8.2%. The core CPI number was 6.1, which shows a 2.1% increase in foods and services, food and energy, because those are highly volatile. Like I mentioned to you previously, food was up 9.4% in April, and the energy CPI was measured at 30.2 in April, according to the Guide to the Market. So stripping those out will be less volatile and give you more of a streamline of impact or effect in core CPI in regards to the inflation rate. I hope this was valuable for you. I hope this gave you a little bit of insight around inflation, how it's being measured. And one thing you need to understand is that the new way of measuring inflation is going to be chained CPI. They're going to start implementing that. They're going to use that to basically offset the extent of how inflation is is impacting us in our overall economy. Not saying it's bad or good, just want you to be informed. Thank you guys for joining us. Thank you guys for listening to the 9 Innings Podcast. As you always know, we're here to do what? To educate, empower, and engage. And today we talked about inflation, core CPI, headline CPI, PPI. We talked about CPI. We talked about PCE, all these different things that are out there. It's very important to understand all of these different concepts and to understand what they're telling you when you're listening to those news channels. As you always know, we're here to do what? Educate, empower, and engage. Thank you guys for listening. Stay humble, stay safe, and I'll see you next week.